Okay, so again, welcome everyone. Thank you for joining me today. Today's program is the Farm Records Book, From Budgeting to the Balance Sheet and Beyond. My name is Florencia Colella. I'm a farm business management educator with Michigan State University. My pronouns are she or they, and I am multiracial. So some housekeeping as usual. If there's anything you want to express during the webinar, including questions, you may type it in the chat box. You're able to unmute yourself also and show your video if you prefer to do it that way, but please stay muted when you're not speaking, or I may have to mute you if there's background noise. If there are any questions that I am unable to answer live, I'll send the answers in our usual follow-up emails that you'll receive after the meeting. And today is the last meeting of this series, but I do hope to see you in the next year again, because I do have some more programming planned for for early next year, actually. But I am enabling now. I'm seeing a chat coming in, so let me take a look at that. Oh, so hi, Sandy. Great to have you again here. Okay, I need to enable our live transcription. Okay, it should be on everybody's screens now. So that is for our deaf or hard of hearing participants, and it automatically adds text to the bottom of the video with a real-time automatic transcription. You can take a moment now to turn it on or off. And if you're joining from a computer, you can do that by going to the CC Live Transcript button at the bottom of your Zoom window. And on cell phones, settings should be in your Zoom options. I would also like to acknowledge that Michigan State University occupies the ancestral, traditional, and contemporary lands of the Anishinaabe, Three Fires Confederacy of Ojibwe, Ardabwa, and Potawatomi peoples. In particular, the university resides on land ceded in the 1819 Treaty of Saginaw. We recognize, support, and advocate for the sovereignty of Michigan's 12 federally recognized Indian nations, for historic Indigenous communities in Michigan, for Indigenous individuals and communities who live here now, and for those who were forcibly removed from their homelands. By offering this land acknowledgement, we affirm Indigenous sovereignty, and we will work to hold Michigan State University more accountable to the needs of American Indian and Indigenous peoples. MSU extension programs are open to everyone. We are required to ensure civil rights policy adherence, to report total program participant race and gender data to the United States Department of Agriculture, or USDA. Providing this information as a participant is voluntary, but I would really appreciate it if you could take a moment now to fill out this form that I am pasting into the chat. It helps me show the reach of the work that I do. Individual responses are not shared with the USDA and are kept separate from registration and mailing lists. If you came to some of the previous sessions and completed those forms, thank you very much. But there's one form for each session. So if you could do it again, that would be great. And for those that are just joining, I'm just going to copy that link again there in the chat for the diversity form. Finally, I would like to recognize that as adults trying to learn while writing the demands from farming and life in general, I hope we give each other as much grace and support as we can. And without further ado, I'm going to switch to you are all seeing my shared screen, right? The Farm Records Book, From Budgeting to the Balance Sheet and Beyond. Thank you, Ron, there. So today's format is going to be a little different than what I've been doing in the past few sessions. This is going to be a walkthrough of the Farm Records Book. I'm going to start by putting the link in the chat. And I'll tell you a little bit about it in a second. And she also got that link in the reminder email that I sent earlier today. So the Farm Records Book is a spreadsheet. It's a record keeping tool that can either be used on paper or on the computer. There's several ways to access this. Well, to access it, you can either go online and just use that link. And I'm actually just going to open it and show it to you. So here it is. hopefully you can see that. Somebody can nod at me, tell me if you're seeing the spreadsheet. Okay, great, thank you. So by typing that link into your address bar, you access this. This tool has been around for a very long time, long before I joined Extension, and many different extension services throughout the country have their own farm records books. This is the one for Michigan, but to run, there is the Michigan income tax, but other than that, there is the Michigan income tax form as part of the tax estimation options in this booklet. But other than that, it's general, so anyone around the country can use it. Yeah. But anyway, this, when I first joined Extension back in 2018, I was tasked with like updating this tool. And so that's where I took it online. It used to be like a paper booklet. And like I said, paper versions are still available. But now we have the option of accessing it online, printing it at home, printing different sections that we may be interested in at home, if that's what we want, or if we just want to buy the booklet and not worry about all of that printing, you can either. And here are some instructions. I'm not gonna make you read all of this, but I was hoping to have the link there, but I don't. But it's shop.msu.edu. Let me drop that in the chat. Hopefully it's linked. Yeah, it is. Cool. So this is the MSU bookstore or store in general, actually. But if you search for farm records book, oh, I actually can't find it. And the reason for that is that it is out of stock. I know that it is out of stock because we just run out and we need to print more, and I'm working on that. So yeah, please bear with me as we do that. You can check via email with me if you're interested in buying the print version and having it delivered at your house. You can do that through this webpage. And I can correspond with you over email and let you know when it's going to become available. Once we do have, so extension offices around Michigan either will have printed versions from the previous version, which is similar to what I'm going to show you today, or they will restock once we have new printed versions available. So hopefully that gives you an idea of how you can use this. You will notice that there's so when this gets printed, this is going to be one page, this is going to be another page, and so forth. We used to have it where it was all one page wide, but some people were really fond of these tables. I'm sorry today I'm gonna make you all dizzy because I'm gonna be scrolling through this file, so hopefully you can deal with that. If not, I really apologize. But anyway, we had these really wide tables that go this is one page on the left and this is one page on the right, and you can see the whole table. So that's the way this is structured. Okay, and going back to the very first page, here you have some space for some general farm information, just basically to know what year, what farm this book belongs to. And here's a summary of the different sections in the farm records book. Let me just move a couple things around here. Want to make sure I'm not leaving anyone out of the meeting. So anyway, the first page, which is one here, is farm expenditures, and we'll take a look at that real quick in a minute. But second page is farm income, so expenses and income, and some personal things that matter for tax purposes. This book does not have space for you to account for all of your personal stuff, but it does have some personal things that we will bring into this farm records book because they matter either for taxes or for farm business analysis. If you do want to keep track of all of your farm income, all of your personal income and expenses, I do have a separate spreadsheet that you may find useful. But again, you may use, whatever tool that you may be using already, if any. But let me just put this in the chat. I think that's what that is. Let me just double check. No, I think that was wrong. Oh, I know what I did wrong. Sorry. I need to do that one again. I forgot the bit.ly part. Okay, let's see if this one works. Yeah, so that's the one. It's bit.ly/personal cash track. But we're not going to be very picky about you tracking your personal income and expenses, but just know that there are some things that are important to know, either for taxes or for farm analysis. Okay, so that's what we have over here, pages 1, 2, and 3, which match with what we have down here at the bottom. And then page 4 and the side of the book, or the pages of the book that I'm going to be focusing more on today, are the cash flow statement, which is page 4. Then I'm pretty much going to skip today all of these 5, 6, and 7. 5 is farm taxes, basically Schedule F, and it's like a copy in spreadsheet form of the official IRS form. I always say this was based off of, I want to say, 2021 tax forms, but they usually make some changes. I try to keep it updated, but if you buy a paper version, you may not, have the last version. So always refer to official IRS forms, but this is an option we wanted to provide. And so there's space to estimate farm taxes and other taxes, more on the personal side or on the capital purchase expense, capital purchase and sales side. And there's other forms for that. And this is by no means a comprehensive list of tax forms that may apply to you. So again, these are just some examples that we hope are useful, but yeah. Then there's a production page 7. I'm going to skip that today. And another one that I do want to focus on today is the net worth statement or balance sheet, page 8. For today's purposes, I actually copied this. So if you want to see how that works, is here I clicked with my right mouse button and you can duplicate a form, because I wanted to have a beginning balance sheet for the purposes of the example and an ending balance sheet. We need both to be able to make some comparisons. So I just duplicated that in the general. So another thing I should note is that link, the bit.ly farm records book link, is a public link. Anyone can access it. So if you open that link, you're not going to be able to make any changes. Today, since I am the administrator of the file, I made the changes so that you all could see this farm example. And I thought it might be useful perhaps to just keep that there for guidance purposes. But anyway, what I want to say is that for you to be able to input information from your own farm here, what you have to do if you want to use the spreadsheet is go to File, make a copy, and it's going to ask you where you want to put it. So pick a folder or pick your general Google Drive. So yeah, you have to have a Google account in order to be able to use this on Google Sheets. If you don't have a Google account and you prefer to not create one, but you have Excel, you may be able to download this to Excel. And the format may be just a little different between the Google and Excel format. And I do have some notes here on how to adjust the file a little bit to make it look pretty. It will still be usable. But if you want to make it look exactly like this one, you have to adjust the column widths a little bit. It's pretty easy. And there's information down there to be able to do that. yeah, so I was talking about the net worth statement and why I duplicated this, and why if you access this file today, there's going to be a lot of like numbers from a real farm really in here that I wanted to enter as an example, but I may get rid of those numbers at some point. So you may want to make a copy if you find that useful to follow for your own farm. Okay. So that was the net worth statement, and then it goes on to the income statement and to financial measurements. We have discussed this in previous sessions, but farms in particular depend on the net worth statement in order to create the income statement. Other types of businesses would wonder perhaps like, why are you creating the income statement after the balance sheet? It might make more sense for other types of businesses to really create the income statement, because the income statement is more linked to the cash flow statement. But for farm operations, we really need to sort of follow this order here. Because for the income statement, we draw information from page 8 and from page 4, and I'll show you more in a minute. And then finally, financial measurements, we're going to draw information from the income statement, the net worth statement, and the cash flow statement. So these three are what I want to focus most on today. All right, before I move on to a different page, are there any questions so far? Okay. Okay, and like I said, today's format is going to be a little different. So we're going to start looking at cash flow, the cash flow statements and cash flow projections in the farm records book. So switching back to our farm records book, I'm going to go to page 4, cash flow statement. And so the cash flow statement has this wide page at the top and this wide page at the bottom. This cash flow statement will draw information from pages 1 and 2 and 3. And it's actually going to allow you to enter some more information that we are just going to draw from your personal records. And I'll show you in a minute. But yeah, I'm not going to go over the detail of like each transaction, each income or each expense transactions, but those these are actually empty today because I didn't enter all of that detail here. But the flow would go on like a regular farm. You would first fill all of this in. You would fill all of the income and expenses, and then you would go to page 4 to summarize the information. That's how it would work. Okay, so first, these 3 columns here are for enterprise analysis, and we're gonna disregard them for today. We did talk about enterprising in the last session, if I remember correctly. So again, you can use this for enterprising, but for today's purposes, I want to show you like everything you can do for whole farm analysis purposes. So we have the 4 quarters here and the column for totals. And we also have some rows for totals at the bottom. So there's income on the left-hand side, and usually these rows here are empty. And you can just complete them with whatever you grow. For this farm in particular, this is what we have. So the example farm that I'm using is a dairy farm. So you'll see some of that stuff here, but this works for any farm. We have some totals here, total operating income, then an option for excluding hedging withdrawals. If you have hedging accounts, we want to distinguish that. And we also have gross cash income that would include the total operating income and some livestock sales from this bottom table, which I'm going to go more deeply into in just a second. But I wanted to show operating expenses first. Works the same way. Oh, another thing is that all of this follows Schedule F categories. So income categories are the same as Schedule F income categories here, except these other income columns or rows. And same with operating expenses. And again, there's other expenses here that you can tailor to yourself, but all of the other ones are the same as Schedule F for the most part. I don't think Schedule F has hedging accounts. So there may be some differences in this bottom rows, but for the most part, it follows Schedule F to the extent possible. Okay, so yeah, there's a space for interest that you can just enter as a total, or you could split by short-term, intermediate term, and long-term loans. And then it just, again, you have a total here, which, which adds these rows here. And as you've seen, like, as you've noticed, I have added some formulas. Usually this does not have formulas. So again, if, you know, sometimes I believe formulas can make things more confusing for those people who are more. Okay, I'm just seeing a comment from Ron that he sent directly to me. So yes, we can talk about that later. But where was I? Oh, the formulas, yeah. So yeah, some if you're a paper person and you see formulas here, you'll freak out, and I don't want that. So usually I will not have formulas in here. But for those of you that find that useful, and for me, you know, entering all of this information, I sort of needed that for myself. So I entered all of the formulas. So if you like that, you may want to keep a copy of this file, because I may get rid of them at some point. Okay, but we have total operating expenses, and like these totals get added for an annual total here at the end. And those are all of the expenses. And then again, we want to exclude hedging accounts. And then we also want to exclude interest, because sometimes we'll sort of like play, or we'll calculate different things, including or excluding interest when we get to financial analysis. So we want to also have that total that excludes interest here. Okay, here at the bottom to the left, we have, so if you remember, when we talked about the cash flow statement, we talked about the different parts of the cash flow statement, and we have an operating part of the cash flow statement, which is all of the above there. And then we have investing activities in the cash flow statement, which is all of this part here. We have financing activities, which is this bottom section here, and personal or non-farm activities here in the middle section. So capital purchases and sales, it has all of the sales here, and it has a total row here, row 15, and all of the purchases, and it has a total here on row 18. Then we have personal income and expenses, again, with totals at the bottom of each small section. And sometimes there will be, you know, sometimes we'll
I'm sorry.
No problem. Good to know people are there, because it may feel lonely if nobody talks. So I even appreciate a sneeze. Okay, but yeah, if something doesn't have a number, it basically means that we only want that for calculating the total, but we're not going to use it afterwards. And usually when numbers are here on the left, it's because we're going to want to draw that number.
What page are you on?
What, Roxanne?
What page are you on?
Oh, page 4.
Okay, thank you.
Yeah, you're welcome. Good seeing you again. Just, I guess, a gentle reminder, since we're at it, that you can set up a one-on-one. I was with Roxanne earlier today, and yeah, if you need any personalized help, I'm happy to meet with you one-on-one over the phone or over Zoom, or even visit in person if you're in Michigan. Okay. Yeah, so some don't have numbers for that reason. I do realize, by the way, that some of these don't fit very nicely in these cells, and I'm going to try to fix that. But fixing these will mean like basically changing all of the numbers, and I didn't have time for that at this moment. But anyway, that's for personal. Financing is money borrowed, money like principal payments made, and we have space here for personal and farm information, financial information. Okay, and then here what we have is basically a summary and a way to reconcile all of that. So we bring the beginning cash balance, which we will either have in your bank statement, or in my case, since I already had the balance sheet, cash is an asset. And so that was in the balance sheet. So I basically brought that from my beginning and ending balance sheets. Hope I am making sense, but if I get too much into the weeds, please let me know. And I realize I'm almost halfway through, so I guess I'm gonna have to speed up a little bit. But I have beginning and ending balances, and then I bring information from the rest of the tables, and I reconcile, basically to know whether the family living expense or the difference between the family living expense and income, which in this case, this family does not report any off-farm income, but you want to make sure that that money that you're saying that you're spending on personal stuff matches with your farm income and farm expenses. Hopefully that and the money that you had at the beginning and you had at the end of the year. So that's what this does. And luckily for this farm, we had no discrepancy, so that's great. Well, I guess we had like 20 cents discrepancy, so that's perfect. And that's it. That's the cash flow statement. Oh, and going back to my slide here, a projection. The way I think about cash flow projections, and do any of these item numbers, sorry, I'm going to interrupt here to address Lucy's question, do any of these item numbers match the tax paperwork? And so the items themselves do match taxes. So I'm scrolling up here, and your like tax forms will start with purchase market livestock, and we'll have all of these items. Numbers, if you're referring to these numbers on the left, we actually do, but hold on, I'm going to switch to page 1 here of the farm records book. If you see my mouse at the bottom. So let me show you. So for example, feeder livestock bought, and here it's telling you that corresponds to Schedule F, Part 1, Line 1B. And so these numbers at the bottom, I know this is confusing. These are column headings for these columns, and these lines and this information here at the bottom are line numbers for Schedule F. So let me pull up Schedule F. Oh no, those are the instructions, and I actually want the form here. Oh, I'm sorry, I have this black thing. All right, hopefully that makes it. Oh, well, it doesn't look very pretty, but hopefully, so for example, farm income, Part 1 of Schedule F, Line 1A, sales of purchased livestock and other resale items. And if I go sales, oh, so these are expenses, hold on. Income, purchase feeder livestock sold, Line 1A, Schedule F, Part 1 items. And so the second one will be raised livestock sold, Line 2. And so if I come back here, and this thing is back, I'll go away. All right. Okay. Line 2, sales of livestock, produce grains, and other products you raised. Raised livestock sold. Patronage, dividends and refunds, Line 3A. Line 3A, corporate distribution. So the names are not exactly the same, but it is prepared in a way such that hopefully it would be equivalent. Hopefully that answers the question. Thank you. Yeah, you're welcome. Yeah, and if anything needs to be improved here, please let me know. Okay, and so on the farm expenses side, you have car and truck, chemicals, conservation, and if you go to expenses, car and truck, chemicals, conservation, it really should line up. Okay, I'm now gonna jump over to the balance sheet. Oh, no. Before I do that, I was gonna talk about projections, cash flow projections. And to me, and like everybody will have a different recipe for creating a cash flow projection, but it obviously will be different whether it's your first time doing a cash flow projection or not. If it's your first time doing a cash flow projection, I would grab the cash flow statement template and think, okay, am I going to want to spend money? Well, this is income. Am I going to want to spend money on chemicals on the first quarter? And if so, how much? And I'm going to have to do some research and some digging to come up with my best estimation. And I'm just going to fill these numbers in as if I knew what I was doing, or as if I was ex post, whereas I'm actually ex ante. And so that's how I would do it if it was my first time doing a cash flow projection. Use the same template and just do your research and try to complete this like as if. If you have a cash flow statement from your last year, then you really want to use that to inform your next cash flow projection. And you want to look at that and go, well, this is what last year looked like. Do I think next year will look different? And just make some adjustments to that. And it gets a lot easier once you've done that a few times. Okay. So hopefully that sort of gives you my take on cash flow projections. To me, cash flow projections are like very similar to a cash flow statement, except that one looks back and the other one looks forward. And that's it. Okay. Let me now jump on to the balance sheet. So like I said, I had to make a copy here. We usually do not have two balance sheets here, but and we will have one of these books for each year. And so what I would do is I would do everything for the ending. This E here is ending balance sheet. So if this is the end of the year and I'm going to analyze this year, this would be my balance sheet. And then I would go to last year's copy of the book and I would grab all of the information from what was my last year's ending balance sheet, which now will become my beginning balance sheet. Hopefully that made sense. But since I was working with just one document here, I brought that information in here in a separate page. Okay, and so this page starts, and basically all of the pages here start with explanations. And since you've gone through these meetings already, you basically know all of this already. So I'm going to skip that, but it's nice to be able to read some to get our heads like in the same page before we start completing stuff. And then each table will also have some information on how to complete it. And so it has current farm assets, which the first one is cash. And this is where I brought my stuff for page 4 from. But if you're completing this in a regular year, maybe you'll bring this from page 4 instead of the other way around. But either way, they should match. That's one thing I'm sure of. Like this all should be consistent. Same when we start entering our here, like for example, livestock, breeding livestock, which are our assets. Well, if I sold or purchased livestock, that should be consistent with what I entered before that I had sold or purchased. But okay, scrolling up, sorry if I'm making you dizzy, but we have current farm assets, which are cash and checking balances, prepaid expenses and supplies, cash and growing crops, so stuff you have on the ground, in the ground, accounts receivable, hedging accounts, again, other current assets, and crop inventories. So this is stuff that you have in storage. It could be feed too. Yeah, and just, as you're seeing for this farm, I entered all of this information. Like I said, it's a real example, and this is what they had. And down here, we're going to have a space to add all of those current assets. And yeah, I entered a formula here, but again, you can do this by hand or use the formula if that is useful to you, if you made a copy. Then we have intermediate farm assets. That includes breeding livestock, which is different from livestock held for sale. or market livestock. Then we have machinery and equipment. And here you'll notice that we have some space to calculate depreciation. And I think I have talked about this before, but there's two different types of depreciation: tax depreciation and economic depreciation. And we do use tax depreciation for tax purposes, but for farm analysis purposes, we use economic depreciation. So there's going to be a percent here. In this case, for machinery and equipment, we suggest you use 10% of this year's inventory. And so we're going to use that percent. Or, for example, for this farm, this is the recommendation. But for this farm, since they have a lot of newer machinery, there may be reasons why you want to change that a little bit. And if you want that, then by all means, you can do that. Okay, and so that's how we come up with our depreciated inventory of machinery and equipment, and we follow a similar procedure. And another thing you may notice here is that we have cost values and market values. You may have heard me talk about this, but we want to distinguish between cost values and market values because it's just very different. Some farms have land that was acquired generations ago, and what they paid for that land was very little to what that land may be worth now. And it's great that it has appreciated, and it's great to be able to show that number to our lender, for example. But for tracking farm financial performance, we don't want to have those inflated numbers. So we keep track of cost value. And the difference between both is important also for analysis purposes. So we strongly suggest you keep both. If you, for some reason, don't have them or don't want to, you can make them the same. Temporarily, I would suggest you do that, not for very long. But okay. Then titled vehicles have a similar calculation if the farm has any, and other intermediate assets. And then it has a space for you to add cost values and market values for all intermediate assets. You may have noticed that current farm assets don't have cost values and market values. That's because since they are current, those values are the same because you just bought it. Okay. Then long-term farm assets are land and buildings and improvements. Land does not get depreciated, so we don't go through all of this. But for buildings and improvements, we basically follow the same procedure. And again, there's going to be some notes here where it tells you what percent to use. And again, like in this case, for example, we used a lower value. If there's an argument why you are using a lower or higher value, that's fine. You can use whatever you want. Okay, so that's long-term assets. And then we add our long-term assets, and we add all of our farm assets here farther down. And then we enter non-farm assets if we have any, or if we want to report any. And then we combined farm and non-farm assets. In this case, this farm just does not analyze, that does not include personal assets in their farm analysis. That's fine. We do need the off-farm income and expenses. That's more important to include. But if they don't want to include personal assets, we are just sort of going to assume that they had the same at the beginning and at the end of the year. Okay. Then we go on to liabilities. And again, we start with current farm liabilities. If we had any accounts payable, which right here, this farm didn't have any. They did have some in the beginning balance sheet, but not in the ending balance sheet. Current loans. And we do have some calculations here. And then we add total current farm liabilities from these two tables. And then intermediate liabilities and long-term liabilities. And we do have some calculations to do here. And we end it with total farm liabilities, and then personal liabilities and deferred liabilities. I don't know if I've talked about this, but just to give you an idea, deferred liabilities would be liabilities that would only come up if you were selling the farm. So, taxes that if you are going to be selling lots and lots of assets, you're going to have to pay those. That's the main deferred liability. And if we want to calculate that, we enter that in this table. That is really important, especially if you are in a farm succession type of scenario. Usually we don't mess too much with this, especially because if you are going to show this net worth statement to a lender, they do have like internal ways of estimating that, so they sort of like build that into their system. So again, sometimes we want to be picky about this, sometimes we don't. But anyway, then we combined liabilities, and here, oh, and there's the equity, which is money that you invest in the business or draw out of the business, and that there's space for that here. And then to the right, we have our summary, and we basically draw totals from up here, and we calculate our farm net worth, total combined farm and non-farm net worth, or just the farm net worth, or just the personal net worth, which in this case, since they are not reporting anything, it's 0. And we also calculate a couple other things that we are going to need for farm analysis in the last page. But that's the structure of our balance sheet here. Here at the bottom is some hints for calculating. So like I said, for the cash flow statement, if you have done this before, it gets easy once you've done it once. But if it's your first time doing it, you might struggle with calculating, okay, well, I have this pile of silage and I don't know how much is in there, or I don't know how to value that. Well, there are hints down here to help you with that. If you've done this once, then it's really easy to make adjustments and improve it year after year, but you're not starting from scratch. So it really makes a difference. What else can I tell you about the balance sheet? Oh, the other thing so in theory, and usually the balance sheet will have like on the left, all of the assets, on the right, all of the liabilities, and they will calculate the net worth the net worth at the bottom. This just doesn't have that. It has, all of the detail, and then it has this very summarized summary where basically all you have is your non-farm or combined or farm net worth. And if you want to see your current, intermediate, and long-term assets or liabilities, you basically have to scroll up. Yeah, I don't know if that's ideal, but it's the way it's set up right now. All right. So that's it for the balance sheet. Again, the beginning balance sheet is the same, except it has different numbers because it's the balance sheet that we created at the end of last year, and that we're going to be using for some of our calculations as beginning balance sheet. So I'm just going to show you the income statement now. And the income statement, like I said before, it will draw information from page 4, like our cash income and cash expenses are going to come from page 4. We have some of that here. We are bringing some of that here and here. But then it will also bring information from page 8. And here it tells you the different schedules that you need to bring numbers from. So you may have noticed here that the different sections had schedule letters. And that's why we have those letters here. We are basically bringing our ending or beginning numbers. So here's where we start playing with both the beginning balance sheet and the ending balance sheets. And then we calculate differences, and that's how we make our inventory adjustments that you probably heard me talk about in one of the previous sessions. And just in case you were not here in one of those previous sessions, our true income in a farm is not just the difference between what we had at the beginning of the year and what we have at the end of the year. We may, in terms of cash, we may have inventory of crops, of prepaid expenses, and other assets that we want to take into consideration. So we need to make all of these adjustments. Yeah, what else can I tell you about that here? So basically, this guides you, like you will notice here, that sometimes the math is ending minus beginning, sometimes it's beginning minus ending. So hopefully, you know, with that bold there and with reading the instructions, you can get all of these right. And in this case, really, you also have the formulas that I entered. But hopefully we have explained enough that even if you didn't have the formulas, or the way we tried to do this is that you don't really need the formulas there. You can do everything by hand. Okay. Yeah, same with other intermediate, long-term. The difference between this one and this one is that in this one, we do take into consideration sales and purchases, whereas in these, we only look at beginning and ending inventories. Then we add up all these inventory changes and we add lines 1 and 9. We add our so look at this farm, for example, their cash income was only $274,000, but their inventory change was $623,000. So their net operating profit was actually $8,000. Then we're actually going to subtract depreciation in other capital adjustments, and we are going to end up in a $6,000 range. But I guess what I'm trying to say is these things can make a huge difference. So we really need to account for them. And I know this, okay, another thing is, I know this is complicated. So as a farmer, if all you want to do is focus on farming and on dealing with all of the really other things that you have to deal with as a farm manager, taxes being one of them, like there's a lot. And so I don't want to like freak you out. I just want to give you the information that, or like the sense that you can do this yourself. It's no rocket science. But if you want somebody to do that for you, we can do that for you at MSU Extension. You do have to have your page 4, like your income, your expenses, what you spent and what you made. You have to have your balance sheet. You have to be able to go out and tell me, well, I have this in storage or that, or I have this in the bank, etc. But then we can put together all of this for you because we have the information. It's not too complicated for us. And like I said, at some of the other sessions, we have a software that we use for that. But yeah, you don't really need the software. It's not that complicated. So I want to give you the tool so that you can do it yourself. But we can do it for you again. All right. So here, there's a few other things that you'll notice. We are calculating being value of farm production and value of unpaid labor for the general manager. We are going to need those for our financial analysis calculations. So we are doing that math here, but really the net operating profit is calculated as inventory changes plus net cash income. And then we calculate depreciation and capital adjustments for our depreciable assets. And we add that once more. And that's how we come up with our net farm income or true income of the farm. And so that's this table to the right. The table to the left basically summarizes the same information differently. But as you can see at the bottom here, there's the same number. So again, it's just the same information summarized differently. We do need a couple of these numbers here for financial analysis. So that's why we have 2 tables. And also because it might be nicer for some to be able to see all of the income items first and all of the expense items first, instead of this hodgepodge sort of things that we have here on the right. So it's a little neater. Yeah, and that's it for the income statement. We have our summary income statement to the left and our detailed income statement to the right. Okay. Finally, page 10 is financial analysis. And this is like, if you decide to do this for yourself, good for you. But again, it's complicated and you don't have to do it alone. We can help, or we can just do it for you. But basically the way this is set up is we have this little table on the first page to the right that brings information from page 4, page 8, and page 9, the cash flow statement, the balance sheet, and the income statement. And most of our numbers are going to come from, well, for the balance sheet anyways, are going to come from the ending balance sheet. Some of them will be cost values, some of them will be market values. And then we'll bring a few numbers from the beginning balance sheet or last year's ending balance sheet. But for cash flow items, that doesn't apply. And for income statements, that doesn't apply either. So that's why all of these are grayed out. Okay. And basically everything else that we're going to do on this page will come from these numbers. Okay, this is just a place to transfer information from, and here I have added formulas. So if you are going to use this version, you don't really need to enter them again. So yeah, all we're going to do at the bottom here is like combine these numbers in different ways to really be able to analyze our farm and tell how our farm is doing. And so before like getting into the detail here, I'm just going to scroll all the way to the bottom. And I'm sorry for making you dizzy, but our very last page of the book is what we call the Farm Finance Scorecard. So this farm here, so basically what it has is the ratios as calculated for this particular farm. And this little like stoplight thing where it shows where that ratio falls on the scale. And like the nice thing about this is that at first glance, we can tell more or less where problems may be or what the general financial health of the farm may be. You will notice that that this farm in general is doing really, really well. And that sort of like connects back to the fact that when I first showed you their cash flow statement, we had like zero discrepancy. Every cent except for like 20 cents or less than 20 cents is accounted for. That will like make it clean everything, clean taxes, clean farm analysis. It really is helpful for you as a manager to have that clarity of information. But I know it's really difficult. Life gets in our way. And like I said, there's help available. But anyway, this gives us our like general overview. And if we want to dig a little deeper, we can say, okay, so our profitability ratios are really all in the yellow. So we may want to look at those. And our efficiency ratios are like we have one good one, and then we have a few yellow ones. So, okay, maybe we want to focus on those. And then we can do some benchmarking, which I explained, I think, in the last session. Shauna, I'm seeing a question here from you. How much does that service cost? The farm analysis service from MSU Extension Farm Business Management Educators is free for any Michigan farms. And so I don't know if you were here last time, but I talked about benchmarking, and I talked about how we are actually like struggling to get enough people to participate in this, which is like mind blowing because it's like really awesome stuff, but it does take a little bit of work, for you to collect or for farmers to collect that information. And like there's a lot of dairy farmers that participate, a lot of row crop farmers that participate. But we do struggle with vegetable producers, the fruit producers, the value added producers. And it's a pity because like then when we put together all of that, Sandy, I'll go to your question in a second, but like unless we have several farmers participating, then we don't have information for them to compare themselves against. And so it's like a vicious circle. As it becomes like a virtuous circle when several are participating, and then they can compare themselves against the industry, and that's really positive for them as individuals and for the industry in general. It also is like really sad when people don't take advantage of this, and like we are not able to really provide that public service for farmers in general. So like yeah. So hopefully that answers your question, Shauna. So I guess another thing I should say is you may have heard me talk about the Telfarm system. And so Telfarm is a service from MSU that helps producers with their records. They help you set up your QuickBooks or your PCMARS if you're setting things up for the first time. And then throughout the year, they help you with transactions that you may not be sure about how to enter. They review your books to see if you made any mistakes. They can keep track of your depreciation schedule. They send you like a tax pro forma thing at the end of the year so that you have that for tax filing. And the thing is that with those farmers that are so already part of the system, it's really easy for us in the field to do their analyses. And so sometimes I think that also falls on us at MSU. We've focused more on those people, and those people are the ones that pay, because that is a paid service. And so I guess like we have to work closely with a farmer that may not be part of the TeleFarm system to help them put the information in a format such that we can do their analysis for them easier. Because like people who are part of TeleFarm, we have like an export thing, and it's a software thing where we can export their books and we import them in the financial analysis software. And it's like very easy to do their analysis because the numbers are drawn automatically from one system to the other. Whereas a farmer that's coming from a book records type system, then we'll have to like tweak the information a little bit to make it fit the software. If we want to do it in the software, if we're going to use a spreadsheet, we don't even need to worry about that. But anyway, that was a long-winded answer, but yeah. Sandy, switching over to you. I would have to, you have everything on paper, and that's okay. That's why I have created this like all the way from records to financial analysis, because that's a portion that we struggle with, because we have a lot of people to help, and when it takes longer, then it just gets complicated. So with something like this, it really is easy once you have like I said, pages 4 and 8, cash flow statement, balance sheet. Everything else basically gets calculated automatically, and we don't even need to mess with the financial analysis software if we don't want to. Or we may want to do this like 1 year, and maybe the next year, once we have a better system in place, then maybe we can put you in the financial analysis software. All right, where are you at? Yeah, I will listen in. Exactly. Sandy. Yep. I know. I sort of think like you. And where do you sign up? You can just email me. We would have to see where you're at in the state and what type of farm you have and who you are a better fit within our farm business management team. There's 6 of us: Southwest, Southeast, Thumb, Northern, Lower Peninsula, Upper Peninsula, and I cover West Central. So yeah, we may, depends, I guess. But there's options, if you don't like me, there may be other people you like better, or the other way around. And we're all good with, with finding the best fit for you. All right. Yeah. And then we're at the top of the hour, so I'm not going to go into the detail of how I calculated each of the ratios to go to this final part of the financial analysis. But right now there's formulas there, so you wouldn't even need to know how to calculate them if you don't want to. But it is also all explained here where each number is coming from, so that if you don't want to deal with the formulas, you can just go to the page and grab the number like manually. And that brings me to basically 2 p.m. or yeah, 2 p.m. already. I like you too, Cindy. Yeah. So I'm not going to bug you with more, numbers and calculations, but I just wanted to show this tool to you all and hope you find it useful somehow. If it's not for, for doing a full-blown financial analysis, maybe it is to start putting together your first cash flow statement, or maybe you're trying to get a head start on what your taxes will look like at the end of the year. And if that's the case, then you may want to look into these pages that, again, like are basically a copy of IRS forms, with a caveat that they may not be as up to date. And so you have to be careful with anything that's not official. But the idea here is that you can do the math and calculate what your farm taxes will be, or your personal taxes will be, and hopefully have a better handle on those you may have heard me talk about tax management and yeah, some of the advantages that you may be able to get out of managing your farm taxes. So yeah. All right. I guess I'm gonna, before I stop sharing, thank you, Shauna. Thank you, Shauna. Appreciate you coming. And so yeah, I showed you all of this, and I wanted to put a plug for the feedback survey. I actually can put a link there because this is our last meeting of the series. So if you have not left feedback there, I really would appreciate it if you could take a minute to thank you, Ron, for your comments there. If you could take a minute to leave feedback, and I'm also going to put that link to that evaluation survey in the follow-up email. So here, the other thing I wanted to show you all is our affirmative action slide. And so is there accounts in our circle that are familiar, accountants, I assume, yeah, okay, in our circle that are familiar with urban farm type growers on a smaller scale? Oh, that's a great question. I may know two. So if you want, email me and I'll get you their names. Aside from those, because you're asking about something real specific, and really it's a growing need because we have more urban farmers, more and more urban farmers. That's really growing. So, okay, Roxanne, yeah. Anyway, what was I saying? Oh yeah, apart from urban farm accountants, we do have a list of accountants in general that are familiar with taxes. So let me, MSU Tax School. There's this webpage, MSU Income Tax School. So this is like seminars for tax preparers that MSU gives. And so they have a farm tax seminar. And we know as MSU which tax practitioners attend that farm tax seminar, which may give you a hint of like which tax practitioners around the state are up to date with tax issues. Again, this is general tax issues, not necessarily urban tax issues, which I totally realize it may be very different, but this may be a close, approximation of which farm tax practitioners are available around the state. But I'll get you those names also for a couple more specific people. Yeah. And all right, I'm now going to stop sharing. And given we are over time, I am happy to stay and answer questions. But for those of you that are still here, I want to thank you very much for having come to these presentations. You will hear from me in the future, both for the follow-up email and also for other programs that are coming. I did really appreciate meeting with you a few times. Yeah, and I look forward to staying in touch. Are there any other comments or questions? All right. Okay. Thank you, everyone. Again, I'll let you all go. Have a good rest of your day, and we'll see you.
Peace, everyone. Happy holidays. Merry.
Peace and happy holidays, and Merry to you too, Roxanne. We'll see you before the end of the year, though. What, yes. Marcellus?
Oh, I was just saying peace. Don't forget to eat a lot of greens.
Yes, eat your greens.
Yeah, good advice. All right, take care. Hey, Sandy.